In this video, we are working through the accounting paper 1, November 2022. We're gonna look at question 2, which is the cash flow statement and financial indicators for 35 marks at an allocated time of 25 minutes. Okay, so we're just gonna get into the question real quickly. The first question says, choose the correct word from those given in brackets. Write only the word next to the question numbers 2.1.1 to 2.1.3 in the answer book. So here it says solvency or liquidity is the ability of the business to pay off all debts using existing assets. So paying off all debts that's the key word. Those are the keywords there. So that is directly linked to solvency. So the answer here is solvency, because solvency is paying all your debts, right? But liquidity is just paying your debts that are due within 12 months. So those are your short-term debts. So this is just short term, and then here we could just say long term. Cool. 2.1.2, it says effective control of income and expenses is a reflection of the risk or the profitability. Remember that we are talking about income and expenses. So income and expenses will definitely show the profitability of the business. So this is profitability. Right. Now, the next one says the use of loans to finance a company is known as, this one is just simply straightforward, so that's gearing. Okay, now let's just quickly populate our answer book. So the first one here is solvency. Second one was profitability. And lastly, gearing. All right. Now we move on to the second one, which is 2.2. 2.2, Eagle Ltd. The information relates to the financial year ended 28th February 2022. Now the business is registered with an authorized share capital of 1,800,000 shares, and we are required to prepare the retained income note on 28th February 2022. So it's really key to focus on the date there. And we are given information A, information B, information C, and D. So that's the information that we're going to be working with throughout the whole question. So what we need for our retained income note, let's just quickly check it out on our retained income note. So if you've watched previous videos, what I like to do first is just to populate the retained income note, because I know what I need to fill in. All right, so here I know that I have the net profit after tax, and then here there's definitely repurchase of shares, and then here I have final dividends, so that even if I panic or something happens, I can quickly remember what I need to fill in. Okay, so now let's look at what is given and what we actually have to work out. All right, so the first thing that we are supposed to come up with is our balance at start. So there's no balance there. There's a question mark, could be a balancing figure. All right, now we are going to look at the second thing, which is the net profit after tax. And with the net profit after tax, we are given here the information A. Okay, information A, we're given the net profit after tax as 908,400. Okay, so we just quickly fill that in. It is given, so it's 908,400. Right, and then we move on to the repurchase of shares. Now you know that you have to be on the lookout for ordinary shares, where we would get that information C. All right, So information C shows the ordinary shares, the number of shares in on 1 March 2021. When we were opening our books, we had 1,180,000 shares that were in issue, and then number of shares issued on 1 July 2021 at 9 Rand 30 cents each. 300,000 shares were issued. Now, number of shares repurchased on the 1st of January 2022 at 1 Rand 40 above the average share price. So this is the type of information that we would deem useful for us to find our repurchase of shares. Okay, here, this is what we're looking for, repurchase of shares. Okay, so here we go. Number of shares repurchased on 1st January 2022 at 1 Rand 40 above the average share price. Okay, which means they repurchased shares at 140 above the average share price. That should be simple and easy. So it's 140 multiplied by 120,000, right? So that should give us 168,000. Right. Okay, that's simple and quick. 168,000. And don't forget that if we're repurchasing something, of course we're supposed to use money, and then our retained income should decrease. So don't forget to show a calculation here. 140 times what's the amount? 120,000. So that's 120. All right, moving on. One last thing that we need is the final dividends. Right, so with final dividends information D, interim dividends of 710,400 were paid on the 31st of August 2021. Now, a final dividend of 12 cents per share was declared to all shareholders on the share register on 28 February 2022. So that means dividends were issued to the shares that were in issue at the end of the year. Shareholders on the register just simply means that the number of shares that we had issued at the end of the year, and then the number of shares that we had issued at the end of the year was 1,360,000. So what you can simply do is 0.12, which is 12 cents, multiplied by 1,360,000. Okay, so let's see what our final dividend was. It's pretty straightforward. Okay, that should be 1,360,000. So that's 163,200. Okay, so that's 0.12 times 1,360,000, and that's 163,200. Now you just quickly add the two amounts there. What you add is this and that to get this amount. 710,400, and that is 873,600 in brackets. Now we can always work our way up to find our balance at start. Okay, then that's 382,800 plus 873,600 plus 168 minus 908,400. Remember that whenever you're working in reverse, whatever you were supposed to add, let's take for instance you are adding this amount that are going down. When you are working your way in reverse, you're supposed to add it back to subtract, actually, to subtract. Okay, so we are done with our retained income note. That was really quick. Everything was just on plain sight. We were able to find each and every piece of information right in front of our eyes. Now 2.2.2, it says calculate the following amounts for the cash flow statement: income tax paid, funds used to repurchase shares, and net change in cash and cash equivalent. So let's start with income tax paid. For income tax paid, what we need to look at is our balance at start. So SARS income tax, we have our balance at start here, have our balance at the end, and also we look at the balance that we actually have incurred for this year as income tax. So that's 389,300. So the three amounts are really important, and those are what we gonna use to determine what we owe or what SARS owes to the business. Now here we are shown that at the start of the year we had a debit balance of 21,300, which means SARS was owing the business. Remember that this is regarded as cash flows. Okay, so it's a matter of paying cash and giving back to SARS, or SARS giving back to the business. Okay, so what we're gonna start with here is the 21,300 here. So it's a debit balance. That means we are not going to pay it. SARS is supposed to refund the business. So it's 21,300. So it's 21,300. Now here we have 389,300 that we are supposed to pay. Okay, that's an outflow, should be in brackets. Let's say just minus 389,300, and then we have SARS income tax, a credit balance of 14,400. Okay, so the balance of 14,400 means that we haven't paid SARS. We actually owe SARS 14,800. Okay, so if we haven't paid, it's actually not an outflow. So we are going to say plus 14,400 here, because it has not been an outflow. What else you could do is that you could take 389,300 minus 21,300 minus 14,400, and it also depends on how you want to express your answer here. But let's just quickly check what I get. So it's 21,300 minus 389,300 plus 14,400. That would be an outflow of 353,600. So I'd like to keep this in brackets to show that it's an outflow, but of course it says tax paid, so I don't really need to show the brackets. Yeah, let me just say or. Now there's quite different ways on working out this. Another way that I'd like you to show you guys is this one. So let's say balance at start. We had 21,300. We are not paying SARS. Alright. Now this one is always an outflow because of course we have to pay. So that's 389,300. But now we haven't paid SARS. We owe SARS. Hence, we are saying 14,400 has not been an outflow. So what this is showing is actually this method, just that this one is in a linear format, which will definitely give the same answer, of course. Okay, let me just clear that up so that our answer book is quite neat and clear. All right, so now we are moving to the next one, where we are supposed to calculate the funds. So the funds used to repurchase shares. Okay, so this is also really easy, because here we're given the number of shares on 28 February 2022 at 1,360,000. All right, but remember that we have done the repurchase of shares and then nothing else happened after that. So we can easily calculate our average share price to be 1,360,000. Okay, so my mistake there. So it's supposed to be the closing amount of the share capital. Let me just quickly write the formula. So it's the share capital over the number of shares issued right there at the end. So that's another way we could get our average share price. So here we have 11,968. So it's 11,968,000 divided by 1,360,000. Because if you could add this and that, it would give you the average share price, right? But we do not know how what these are worth because we are not given the ordinary share capital at start, so we can't really use that. Now, using our balance at the end, we can actually find the average share price because this was supposed to be sold at the average share price, but the business got to pay an extra amount of 140 above the average share price, right? So there, just quickly calculate. Okay, divided by 1,360,000, so that's 8.8. So this is the average share price. So the business in total paid 8.8 plus 1.4, and that should give my mental math is not mental mathing, so that's 10.2. So that's 10.2. The business paid 10.2 to repurchase the shares. So I'm just gonna say 10.2 multiplied by 120,000 shares. So that gives 10.2 times 120, 1,224. Okay, 224. So it's really key to show how you got the 10.2. So we can just say 11. Let me just quickly check what was that. 11,968. 11,968 over 1,360,000, because there might be part marks for this. See, it's 5 marks is equal to 10.2 rands. Okay. Oh, that's 8.8 actually. That's 8.8 because that's the average share price. 8.8, and then 8.8 plus the 1.4 will give you the 10.2. Okay, so now it says the net change in cash and cash equivalents. So the net change there, we are supposed to look at the balance at start, balance at the end, and whatever changes were there. Okay, so with cash and cash equivalents, I think the calculation is also straightforward here because we have cash and cash equivalents at the end of 44,700, and we had cash and cash equivalent of 8,000 at start. Right, so the 44,000 here, it's the balance at the start, at the end, I mean to say. So we are calculating the net change. Remember that to calculate the net change, you would have cash and cash equivalent. I'll just write E. So at start, so cash and cash equivalent at end, and then here you would have the net change. Either or, the net change would be up here or just down here. Depends on the format of the question. Net change in, let's just say C and C equivalent, cash and cash equivalent there. So now we're just gonna work with the linear format, but that's another way you could work it out. We have our balance at start, at the end. Oh, this balance at start is still in my mind. That's 44,700. So that's 44,700, and the balance at start of 8,000, right? So we're supposed to say minus 8,000 and minus 8,000 to see the change. But now there's some piece of information that we have to utilize here, because if we have a bank overdraft, it will affect our cash and cash equivalents. So we have a bank overdraft of 1 33,000 there. So we're supposed to decrease our cash and cash equivalents by 133,000. Oh, excuse me, we're actually supposed to add because it is from last year. So it will decrease our cash and cash equivalents from the previous year. It's just basically saying 133 because it's a negative plus the 8,000. So this would be last year's balance, like the balance when we opened our books. So that's a negative 133 plus 8k will give us negative 125. You see, so you can actually work it the other way around, but because this was a negative balance, okay, it was a negative balance, and now we are moving to 44,700. It's actually we are actually moving to a positive balance. So to clear this amount up, we need to add it up. Okay, so we need to add it up so that we can clear the amount of that negative balance. I think this would be much clearer if I did something like, okay, so net change, so net change, so that's what we're looking for, and then balance at start and then balance at the end. So the balance at start, we said we had a negative of 125, and then now we had a positive of 44,700. We are trying to find the difference between these two amounts. Like, how do you determine that? So here you would first clear this 125 by adding 125, right? And how do you move from 0 to 44,700? It's actually adding 44,700. So that's how you could get your net change there to being let's just quickly calculate 44,700 minus 8,000 plus 133. So that's 169,700. So we had to add 169,700 to these two amounts, such that, or to 125,000, to negative 125,000, such that we get 44,700. I really hope that is clear. It might be a bit confusing, but don't be afraid to rewind the video and watch how I did that once again. So this is another way that you could do it. Okay, and also this is also another way, the linear method, because we work in different ways. So here it's 169,700. Okay, all right, now we're moving to 2.2.3. It says calculate the following financial indicators on 28 February 2022. Okay, first one, debt equity ratio. Previous video I've uploaded, I was showing you guys on how to actually work with the formulae that are provided on your formula sheet. So familiarize yourself with that, and you can work your way up with financial indicators very, very quickly and easy. So our debt equity ratio, our formula, for sure you know that it's supposed to be debt, and then you have equity, as it says. It's just simply straightforward, just like that. Okay, so our debt, we know that we're looking at our non-current assets, and then we're looking as to equity. Excuse my handwriting there, it's really quite bad. Okay, so we are going to look for our non-current assets. Let's check what we are given there on information B. Okay, so there's total capital employed. No, we cannot use that. But there's ordinary share capital, there's retained income, which forms our equity, and then we have a loan, of course, so that's our non-current current liability. So we have a loan of 2,886,000. That's pretty straightforward. We just have it here, 2,886. And then let's go check what our equity is. So with our equity, shareholders' equity is also given at, let's just highlight it and see what we get. This is it. It's 12,350,800. Okay, it's 12,350,800. As to 12,350,800. Right, remember that it is always 2 1. Don't forget that, because that's really key. At some point you'd make a mistake and say 1 is to a certain number, but no, that's not the case. So it's supposed to be a decimal is to 1. So it's 2,886 100 divided by 12,350,800, and there I'm getting 2.3. What's this now? 2.33. But of course you have to round also. It's going to be of 2.3 as to 1. So the final answer is 0.2 is to 1. Right, easy and simple. Now, okay, it says 2.2.3. The second one, we're supposed to calculate the percentage return on average capital employed. So that's where you're talking about your loans. You are talking about what's this? These things are running away now. Okay, we're talking about your share capital. What is your return on your capital employed? Okay, so here this was really simple, because our total capital employed also here we were literally just given. So it says 15,236,800 was our closing balance for total capital employed. But if you do not know the formula, then this information is really going to be useless to you. So now let's just quickly write down the formula. It is supposed to be, excuse me, but I know that under here it's a half over the shareholders equity. Right, and then here it is supposed to be our net profit before tax. Okay, so plus loans here. Right, so let's just check what we are given. So net profit before tax, it is 1,297,700. But remember that to get that I totally forgot. Now the formula is hitting me. Plus interest on loans, because this decreases our return on average capital employed. Okay, all right. So now to get our numerator, we add the net profit before tax and our interest on loan. So that's 382 plus 389, 300. Let's just quickly add the two amounts. Is that the wrong? No, that's the incorrect amount. I'm looking at the income tax. See, I haven't highlighted. So here it is 1,297 and 382. Okay, it's 1,297 700. So it's 382 1,297 700. So that's 1,679 700. Right, we have our numerator. Okay, I can just erase this. So it's 1,679 700. Remember that it's supposed to be a percentage. Forget to multiply there by 100. And then now half of our shareholders' equity plus loans. Okay, So there's quite some addition there to do, but we can work it out, of course. Okay, so I'll just use this space to work out this question. First thing that we're looking at, our shareholders equity, the average, we're gonna add 12,350, 800, balance at start at the end, plus the balance at start of 10,750,000. Right, that's what that's our shareholders equity, and now we have to add the loans. So the loans, we had 3,700,000. Okay, 3,700,000 and 2,886,000. So it depends whether you want to add them separately or you can just add them at the same time and then you multiply by a half, or you just divide by 0.5. Okay, but I think multiplying by half is actually quite good. Okay, so let's add, these are the loans. Oh, this is shareholders equity. So the loans, the loan amounts, it's 3,700 plus 2,886. Okay, so let's add all of these. Let's actually add all of these. So it's 12,350, 800 plus 10,750. Okay, plus 3,700 plus 2,886. And I'm getting 29,686,800, and then we go half. Right? Because we're supposed to do half of that. That's how we get the average. Okay, so I can just simply erase here and plug in all those numbers, but you can just add your loans, your loans and your loan and your shareholders equity for this year only, and also add your loan amount and your shareholders equity at this from the start of the year. So either way, you can work it out in any way that you feel comfortable. So here we have half of 29,686,800, and let's see what that gives us. So that's 1,679,700 into the half of 29,686,800. Okay, times 100. That should give 11,316. I don't know whether I should round off or not, but okay, let's just 11.32%. Okay, so 11.32%. Right. Now we are moving on to, I think it's the last. Yes, it's the last question. We're supposed to calculate dividends per share. So dividends per share, we quickly move to interim dividends and the final dividends that were issued here. For the first one, it said interim dividends of 710,400 were paid on the 31st of August 2021. Now here we are just going to look at these dividend payouts separately. We're going to look at interim dividends separately, and also we're going to look at the final dividend separately. Now 710,400 was paid, right? 710,400 was paid to how many shares? So when did we pay? On the 31st of August 2021. How many shares were in issue on that date? Because the interim dividends were paid to the number of shares that were issued on that date, which is before we repurchased shares, which means we're going to add 180 and 300,000. So that's 1,480,000. All right, so it's 710 400 divided by 1 480, which is 0.48. So that's 48 cents. Now we are gonna look at the final dividend. So the final dividend, it said the final dividend of 12 cents. Of course, it was given, so we don't really need to calculate anything there. So the dividends per share that we are going to have, so let's just quickly show our calculation here. Divided by 1,480,000, which is 0.48. So lastly, we're just gonna add 0.48 for interim. This is interim plus 0.12 for final. So that's a total of 0.6. So 60 cents. Right, so we've come to the end of the question. I really hope that was useful. I really hope that was beneficial. Thank you so much for joining me today. Don't forget to like, subscribe, share, and drop a comment on whatever accounting content you might require help on. Feel free to share with anyone, your schoolmates, friends that need to ace accounting, that really need help with accounting. That would really help on the creation of more content. And please don't forget to check out previous videos that I have uploaded if you have any further questions. Cheers.